Good morning, and thank you for joining us on today's webinar from Robert Land Academy, Affording Robert Land Academy our Tuition Payments Tax Deductible. The purpose of today's webinar is to provide information on ways to make access to Robert Land Academy more affordable through the utilization of certain tax strategies that exist through various provincial and federal tax laws. I'm Captain Alan Spahn. I'm the Administration Officer of Robert Land Academy. Now I would like to introduce Peter Merrick. Peter is the president of merrickwealth.com, and Peter has an active career in financial planning, investment, risk management, estate and business success planning, cross-border planning, executive benefit and pension fields, and the list goes on. He holds numerous designations in the financial and management fields. He's been a university professor teaching in these related fields, and you may have seen Peter as he's a regular panelist on a number of television television shows such as CCED's The National, News World, BNN, just to name a few. He's also a professional financial writer with over 400 published articles to his credit. He's published 2 books and has a third soon to come out. Without further ado, I'm going to turn the presentation over to Peter. And Peter Merrick, welcome, and thank you for joining us today.
Thank you very much, Alan. I want to thank each and every one of you for taking the time out today to go through this presentation. Robert Land is something very special for me, because not only am I presenting to you today, but you can see with that picture with that boy with so much hair. I'm so jealous I don't have it anymore. I went from Robert Land from 1980 to 1984, and the school has had thousands of students go through it, and it's been very successful with many of them, where most of them go to university. One of the things that's really great about Robert Land, and it's stretched through the entire history of Robert Land, is it's catered to a certain type of boy, and it's a boy who needs focus and has had problems learning under traditional classroom settings, and they need structure. And that's a benefit for a parent, because unlike many other private schools, Robert Land can meet many criteria to receive government grants, tax deductions, and a whole slew of things that many people aren't aware of. But it's very important that you become very familiar with this, because if in certain circumstances, and we'll go through it, that if your boy meets many of the criteria, the first year of tuition towards Robert Land could be free. You could be positive of $2,000, and we're going to go through that. And again, most people don't know about these tax solutions that are available in all these government programs that we're going to be talking about. But by the end of this, you should become very aware of this, and if you have any questions, either contact Alan or myself. I'm just going to move quickly over to the slide to just go over the agenda. We're just going to briefly talk about child care expenses, medical expense tax credits, health and welfare trust, which you're going to find is going to be, for many of you, a really good friend. The disability tax credit that you'll be eligible for if you go through the different steps. The registered disability savings plan, which most people aren't familiar with, but it's available, the Ontario Disability Special Payments, and how to use the registered education savings plan with other government benefits going forward. And we're going to just spend the next 20 minutes or 30 minutes going over this. So Robert Land, as I mentioned, has been around since 1978, and it's been assisting thousands and thousands of boys, and many of them meet the criteria for these government benefits. And this happens to be a little internal study that they conducted at Robert Land over the years, where most of the boys, 68%, have been tested as having ADHD. You can just see the whole list, learning disabilities. And this is, you have to look at this being a positive thing, because with the tax benefits you're going to be able to afford for yourself and your boys, it's going to really be useful to take advantage of this, and we'll go over this. And I just want to mention, Al was mentioning earlier that I do a lot of writing. I do that as a big part of my professional career. I was diagnosed in 1977 as being dyslexic. And much of my success, or all my success, I owe to Robert Land because of the structure that it gave to me. And it also built up my self-confidence because of the structure and the many of the events that your boys are going to be participating in. If it's the first time that your boys are attending Robert Land, they're going to be doing a lot of types of exercises, group exercises, and they're also going to be doing something called the fall exercise. And it's going to build up their confidence, and that leads to being better at academics too, because their confidence will be built up. So I'd like to move on and just go over, get into the meat and potatoes of why we're all here today. How can we go and deal with the cost of Robert Land and actually bring it down for yourself and make it affordable? Robert Land is a private, not-for-profit institution, and the reason it's not-for-profit is because it is a military, it's a school based on a military theme, and it's an all-boys school, and it has a lot of freedom. If it receives any funding from the government, the school would not be able to deliver the programs that it delivers to your boys, and it wouldn't be as effective. And it's been proven every time that a school has taken funding from the government has been able to change the structure and the product that it delivers. So currently, for this year, for 2012, 2013, Robert Land, the approximate cost is about $42,000. But that's not the real cost of Robert Land. The real cost for Robert Land, if someone is in the top tax bracket in Canada, is $80,000. And the reason I came to that number is because for many of you who are paying for Robert Land, it's after tax dollars. So this is a number we're going to be looking at the entire time. How do we bring down that cost? The $80,000. So if you're in Ontario or you're in Quebec, if you're sending your boy to Robert Land, you will have to earn approximately $80,000 if you're in the top tax bracket. And what we're going to do today is we're going to look at how do we bring that number down. And there's many things that we can do. And before I do that, I want to go over two definitions, because this is what we're going to be focusing on specifically in the next few minutes. Tax deduction. A tax deduction is something that you do that reduces the taxable dollars, or the amount that's going to be taxed. For example, tax deduction would be your RSP. If you were to put $20,000 in your RSP and you were earning $80,000, the taxable income is going to be $60,000. So that's one thing that I want you to be aware of that definition. The second one is tax credit. Once you determine what your income is, and let's say you find out that you owe $30,000 to the government in taxes, a tax credit is a credit that will reduce the amount of tax. It's not a deduction of your income, it's the actual tax. Now there's two types. There are two types of tax credits. There are refundable tax credits and non-refundable. A refundable tax credit would be like the GST. Many of you fill out tax returns for your children currently, and they're not earning very much, and they receive a refund, a GST or a HST refund. A non-refundable tax credit would be like the medical expense tax credit. So if you owe no taxes and you're eligible for a non-refundable tax credit or a tax credit, you won't receive the money back. So I just wanted to go over those definitions because it's very important as we go through the presentation. So the first thing I want to talk about is the Child Care Expense Deduction. Any of you who have a child who's under 16 years old are eligible to claim this against Robert Land. Everybody is able to do this, and Robert Land meets the criteria for it. This year, it's only $4,000. I'm just going to go through the expenses. You can go through the presentation later. So this year it's $4,000. For any of you who are sending your boy to Robert Land, you'll be able to claim this expense. And it's something, and it's worthwhile. But what does it do? It only brings the number, if you're in the top tax bracket, down to $76,000 from the 80. So it's not very much, but it's something. But what we're going to do is we're going to go through the things that are going to require work on your part, but are going to be able to really reduce that nut of the $80,000 right now.